The Fed has to get ahead of inflation. So that's got to happen. When you do that, you slow down the economy. So our basic assumption is it moves from above trend to sort of below trend growth, and then the Fed will settle in and it ought to come back to trend if they got it right. Now the good news is they're bringing inflation down. For the last 15 years we've been talking about, can we get inflation up enough? So it's this wild thing that people are like, do you remember for 15 years we had the issues of deflation were on our table.
But do you consider beating inflation to be the most important thing?
I think they've got to get the equilibrium back in the economy. The amount of stimulus that came in January of March last year on top of the stimulus is already done. Look, the fiscal side of the United States administration, the president and the administrations, past and current, the Congress endorsing it, and the Fed all came together and basically made the pandemic recession disappear in a year.
Yes.
That's pretty amazing.
Yes.
Now the problem is it kept going. So our customers' accounts are multiples of where they were before the pandemic.
But are you seeing through customers yet economic hardship?
No.
Are you seeing, because eventually loans will go sour.
Every quarter we do a stress test that assumes 10% unemployment and stuff like that. So we assume the worst all the time. But here's the fact. Delinquencies, charge-offs, 15 basis points, level 16, whatever it was last quarter. Those are, it was 40 basis points in 19 before the pandemic, and we thought that was all-time lows. So it's come down a lot. It'll go back up to those levels, but that's a normalizing, not of the underlying risk, because it actually was low. It just brings it back to pre-pandemic. So the economy is as big as it was. Unemployment is very low. The wage growth in our customers that you can see coming through the direct deposits, 8% up year over year. They're spending 10% more in May. So that's all a good anchor to win. It also makes the Fed's job tougher.
That's the point.
Yeah, it's
because
a double-sided trade.
Now the question is, how committed is the Fed to doing this? And how, so let's say you get to neutral or 3% or whatever on rates, and inflation is stubbornly still at 4 to 5%. Do you keep going?
Right.
Because the integrity of the Fed's at risk.
It's not the integrity. It's getting the economy back in balance. That stimulus, people are still fueling people's behavior and price rises. Now, the real wild card in this thing has been lately, obviously the horrible humanitarian situation in Ukraine and the war and the invasion. But before that, we had the problem of the shortages and supply chain. And the Fed can't really address the fact that the pandemic is slowing down movement of goods and shortages and the parts to make a thing. So you got 90% of maintenance sitting there. So people started hoarding, and that sort of eased the supply chain. Now it's back in a thing. And so this will even out. And they bet it would even out, and it didn't. And that's where inflation got ahead of them a little bit. And they're out on the case. But this is the way I try to put it for people. If you think about mid-2019, unemployment is low, about the same level as now. The economy the same size. The Fed was 2.5% short. Why wouldn't they be back there?
The situation, this is a Davos that seems to be more serious, with more issues of greater complexity than I can recall. Would you agree?
I'd agree, because I haven't been around for all the Davoses, but I'm not sure. Historically, I don't think there was a war in Europe going on in any of the priors. So that adds a complexity and a seriousness when you had, President Zelensky address the crowd, the absence of certain constituents and stuff. So you got the inflation risk, you got that, you've got the supply chain risk, you got COVID still as a thing, and but in the end of the day, we're here working on problems and trying to figure out practical solutions. So I'm optimistic about what we're seeing on the environmental front. I'm optimistic what we're seeing on the metrics front. There's a lot of things I'm optimistic about out of the Davos.
On the optimism, do you think the difficulty of maintaining an environmental agenda when there are these other issues, how are you managing to do it within Bank of America?
Well, so what's happened since the last time we were here in person? In Bank of America and colleague companies is the private sector has taken the field with force. So net zero commitments by companies in their supply chains, net zero commitments in how they run their operations, causes a series of activities that creates, purchase power, creates business models, creates that. So that's gone on. And then, I work on a sustainable markets initiative with His Royal Highness Prince Charles, and 100 CEOs met in London 6 weeks ago, and we talked about 4 weeks ago, and we talked about all the work we were doing together. So the private sector from before COP26 through COP26 now have committed these net zeros. You can't change that. Will oil prices go up and down between now and 2050? My guess is it'll go up and down a lot here and there. But you can't change this basic commitment by these companies to move their operations to different places.
And for you, is this the biggest single issue? I mean, non-financial.
They're all big issues. And so, I believe there's a business. I believe there's a transition project. I believe it has to be just transition. I believe the oil companies have to change. I believe the new energy companies have to change. Everybody has to work together. So it's a business thing that we can solve, and the private sector has to solve it because we have the money, the dollars, the energy, and the innovation. The public sector has to work with us, and the advocates and stuff have to see us make a movement on behalf of society.